But my next guest isn't so sure the gains will stay locked in here. Joining us now is Manulife's Investment Management's Nate Thooft. Nate, it's great to have you. And, we're seeing the markets kind of grinding although the tech stocks, the NASDAQ has been very strong this week. What does that tell you?
Yeah, we entered this year with this general dynamic that we're going to have a bit more volatility this year, just given the levels of uncertainty around policy dynamics on a global basis. And we've seen a lot of that, right? But at the same time, we are not in the camp that this is a doomsday scenario when it comes to the tariff dynamics and some of the growth concerns that are being articulated. And so when we see these types of rallies, we are generally of the view that we're going to see these episodic upside and then downside again. But by the end of this year, we should still end up with a slightly positive outcome when it comes to equity returns, likely in the mid to high single-digit range. But we do need to accept that we're going to see some give and take in the market based on the dynamics of how these policies are ultimately concluded when it comes to negotiations and where we finally land on the numbers.
Yeah, I mean, just to tease you a little bit, it's kind of safe to say that we might be a little higher, we might be a little lower, but it's also hard to go out on a limb and say we're going to be dramatically higher or lower, so it's just kind of a tough thing to talk about. So where do you see the most opportunity right now, the places where you'd be really leaning in to make your bets or not?
We think some of the areas outside the U.S. still have some opportunity. And this is not to dismiss that the U.S. has some secular long-term advantages when it comes to our quality of companies in the U.S., their earnings potential. But looking outside the United States over the next, let's say, 6 to 18 months, there's some real opportunities, partly driven by the fact there's still under-owned areas of the market outside the U.S. There is a bit of a flight of foreign investors to find new sources to put their dollars to work beyond just the United States, like they have for much of the last decade. And there's also a general valuation advantage. And we're seeing some signs in areas like Europe where we are seeing additional fiscal spending coming into play and improvement in the lending that we're seeing from a private sector perspective.
Yeah,
so there is some nascent signs of improvement when it comes to growth potential.
I think a lot about Warren Buffett and Berkshire and how they, have looked at Japanese trading houses and other things to kind of find that value. But then, and I respect that, and I know that valuations are much more attractive in other parts of the world. But I go, where's the innovation, right? Like, where are the companies that are going to scale to multi-trillion-dollar investments that are going to help generate those really strong long-term returns?
And this is precisely why we're seeing it's more of a tactical, shorter-term opportunity. The secular advantages are still with these more innovative, higher growth, higher consistency of growth companies in the U.S. But the dramatic outperformance of some of those stocks over the last decade does lead to opportunities and a broadening of participation on top of the fact that we're seeing foreign flows and investor flows moving into more diversification outside of just U.S. assets. And I think we should not underestimate that given some of the reordering of the geopolitical dynamics that we're seeing in the marketplace.
Other places, looks like you're pounding the table to some extent. U.S. financials, is that right?
This is one area within the U.S. that we like. It's worked pretty well over the last 18 months. This is an area that some of those tech dollars have been redeployed into. But when you look at the financial sector, valuations still are reasonably attractive, not as cheap as they were 6 or 9 months ago. But at the same time, we do see some positive trends on a regulatory perspective, approvals of mergers, for example. We also see further consolidation in the banking industry. Keep in mind, we have thousands and thousands of banks still in the U.S., and that consolidation is going to drive mid-sized and larger banks to continue to acquire some of those smaller opportunities. And so there's some real opportunities on top of the fact that we have some greater volatility in the market, which does play into potential greater trading for some of the more exchanges and some of the other players within the financial space.